Hello, I'm Dominic Hobson, co-founder of Future of Finance. My guest today is Alice Chen, co-founder, chief operating officer and general counsel at InvestaX, a Singapore headquartered investment platform for private market digital securities and security tokens issued by venture, private equity and real estate funds, whose goal is to build the infrastructure to bridge the gap between CeFi and DeFi. Alice, thank you for joining us.
Thanks, Dominic, for having me. I've been anticipating this interview.
That means, Alice, you'll be extremely well prepared.
Oh, I hope.
My first question is really quite a fundamental one. I've used the term infrastructure there in my introductory remarks, but are you actually building an exchange or are you building an entire infrastructure here?
I would say that it's probably both. And I say that because the exchange is part of the infrastructure that we are building and what has been lacking in the private market space. And we believe, like many others who are building in the space, that the biggest opportunity for tokenization is in the private markets, given their inefficiencies compared with public market infrastructure. There's essentially none, right? And this is a good thing because you actually have no legacy infrastructure to replace, where this could be potentially problematic for existing financial institutions who have spent a lot of resources building legacy infrastructure. So I think the opportunity is greatest in the private markets. And of course, if you compare it to the public markets, you see that everything seems to work pretty efficiently today in the public markets. I use Charles Schwab, and we essentially log online, we can execute trades, make deposits, everything's online. And with dematerialization and central depositories, it seems as though the public markets are pretty efficient on the surface, but we all know that there's still in the back end, a T+2, 3, 4 day settlement period, and this manual reconciliation process that's required. And what we'd like to say as we're building this is to look at the public markets and see that every significant expansion in the public markets has been attributed to some technology innovation or new process flow. And things like even from the first dedicated trading venue, which was the London Stock Exchange, to electronic trading floors, dematerialized shares, central depositories, even to new investment products like ETFs, were all enabled due to infrastructure. And that's exactly what we're trying to build.
Now, you've used the term public markets. There is, of course, a private public divide in the world of blockchain as well. And I wondered if I could ask you a little bit about the history of your organization, because both you and your co-founder were at IXswap and remain there as well. I just wonder what the relationship is between IXswap, which, if I'm correct, is actually a public blockchain. What the relationship is between IXswap and InvestaX.
Yeah, so maybe a little bit of history. InvestaX started quite a ways back, 2015. It started out as a traditional real estate crowdfunding platform. But what we realized was in the traditional crowdfunding platform space, the technology was actually very low. Yes, you did enable buyers and sellers to find each other online, but we didn't really change the investment process, and you still needed to do a lot of paperwork and trust third parties to close these deals. And so in 2017, when ICOs took off, the way we looked at ICOs was basically crowdfunding 2.0, using digital currencies to buy these so-called utility tokens, where you could transact millions of dollars without any central banking system. And it was centered around this whole community building, supporting projects you believe in, very similar to the ethos of crowdfunding. So we embarked on the blockchain tokenization journey in 2017, trying to build all the necessary pieces, including the tokenization engine, advisory, and exchange, at the same time applying for all the necessary licenses to operate such a platform. So tokenization is what we consider as the next generation of crowdfunding and online investment technology. And actually in 2019, InvestaX made a strategic decision to move away from paper-based offerings to strictly tokenized offerings. Now, the relationship between the two, so InvestaX is Singapore-based. It's licensed by the Monetary Authority of Singapore. It holds a capital market services license to deal in securities and a recognized market operator to offer trading on a organized market. But all of that was in place. However, we noticed though, just because you've tokenized an asset doesn't mean that there'll be automatic liquidity. That's not how it works. So we actually built our own solution out of necessity, and AMM for security tokens modeled after Uniswap. So IXswap is, we believe, the world's first automated market maker and liquidity solution provider for security tokens and real world assets. So what you have is security tokens on the one side of the trade and crypto or some kind of digital currency on the other side of the trade. It's essentially something that hasn't been done before. You need both securities and the payment form on-chain to allow for on-chain settlement. And so IXswap actually uses licensed broker-dealers and licensed custodians. So the first licensed broker-dealer is InvestaX. It plugs, IXswap plugs into InvestaX, and it can plug into other licensed broker-dealers and exchanges globally. That's the whole, I think, mission of IXswap, is to provide this AMM solution for all the platforms that are dealing in security tokens.
Right. So InvestaX has these regulatory licenses, but the main thing which IXswap has to teach, if you like, the world of traditional finance, by which I'm including your tokenization platform now, moving away from crowdfunding. The main lesson which you're carrying from IXswap to InvestaX is this liquidity provision, the automated market making functionality. Now, is that the main lesson which DeFi has to teach TradFi, CeFi, the world of tokenization, or are there other lessons as well?
Well, you know, I think a lot has happened in the whole crypto digital asset space, particularly last year, end of last year and earlier this year with the whole FTX collapse, which highlighted some issues in the CeFi or traditional finance system, which is the risk of that single point of failure. And DeFi is meant to reduce the risk, or at least counterparty risk, and reduce that single point of failure risk. Mm-hmm. It's all about removing unnecessary intermediaries. You know, if I think about applications today, which are not blockchain based, but something like shared services, right? Airbnb, online booking, Grabs and Ubers, Amazons. These are all activities which we have gotten comfortable around to allow certain intermediaries to be removed, which ultimately gives consumers more choice and control. So DeFi is about transferring some of that control and trust to technology. Now, subsequent to FTX, there has been a big push in the crypto community towards DeFi. And even the MES announced last year a project called Project Guardian. It had 4 pillars, and one of those pillars is specifically focused on institutional grade DeFi. Now, DeFi protocols are self-executing applications on blockchain that can automate financial services such as lending, borrowing, trading, and what the MAS has actually mentioned is a focus on this institutional grade DeFi. And what does that actually mean? It means basically allowing the access to these DeFi protocols through a permissioned way where you're actually doing KYC, AML checks on the front end, but powered by DeFi protocols or applications in the back end. But you allow users to access it through a user-friendly interface, a front end which is licensed and trusted, but then you're still interacting with these DeFi protocols in the back end. I think this will be a powerful tool for traditional financial companies to differentiate themselves and also attract new customer base.
It is, I think, a pleasing irony that the failure of FTX and the regulatory problems which other cryptocurrency exchanges are now facing indicates that the original pioneers of blockchain in the financial markets were right, and that the decentralized model is that avoidance of that single point of failure. And now, as you say, people are talking about institutional DeFi, which they would not have been doing as recently as this time last year. So it's interesting how the FTX fallout has, in a way, restored the prestige of the early blockchain enthusiasts. But anyway, you have, I think, used the term tokenization as a service at InvestaX. What does that mean, and who do you compete with if you're providing that service?
Yeah, we get asked this question a lot. And I would say we've built this one-stop shop for tokenization where you can issue, trade, custodize, have liquidity options through this AMM model, launch new projects, along with ancillary services like advisory, access. And we've also integrated with 5 public blockchains, including Ethereum, Algorand, Tezos, Hedera, Hashgraph, Polygon, along with other services, banking services, KYC, AML service providers. So what all of this is meant to do is offer someone a one-stop shop to issue security tokens without having to go and do the whole build and get licenses, the requisite licenses themselves. Anyone who owns an asset that has value can now tokenize their assets by coming to one-stop platform like ours. Now, I think, your question, who are our competitors, in that sense, I think we're not trying to compete with anyone really. Most of the other platforms are looking to create their own ecosystem on their own platforms. What we're trying to do is offer a complementary service through our services like an AMM for security tokens, which can be plugged into any other platform like ours, like the InvestaX, or exchanges, or even tech providers. There are some security token tech providers, they only provide tech and nothing else, where we can add this as a complementary service for all of their security token issuers. I don't know if that made sense. So essentially what we're saying is, this is a service where anyone who wants to tokenize their assets can come and reap, all of the benefits of the time and resources, technical build, licensing, to enable themselves to be able to issue security tokens, create their own ecosystem of investors, and know that this will be done in a compliant and licensed fashion.
Well, I think a lot of people are now, including banks, are offering what you might call, or what I call, tokenization engines. But I often feel that those engines are defensive maneuvers, really, by established institutions concerned that they might lose their client base to organizations such as yours. And I suppose that was what the intent behind my question about competition was.
Yeah, that's true. That's true. But there's a whole world of assets to be tokenized, and not all of these asset management firms or issuers will have the resources or the financial wherewithal, like the banks, to create their own tokenization engine. So we can become a partner for the rest of the category of issuers who are looking to essentially hold their assets in the digital form so that they can do more with it, and just really reap the benefits of tokenization beyond just fundraising alone.
Now, as you pointed out, one of the attractions of working with you is that it's compliance is built into the tokenization as a service. You've got the licenses, you're in Singapore. But I wonder how important it is also not just to be regulated in Singapore, but actually to be in a financial center which is developing, I think, into the global center of tokenization. You've got a cluster of tokenization platforms there, not just yourselves, but MarketNode and FundNode, ADX as well. Wendy and I had a conversation with a major fund manager here in London who thinks that that Singapore is more likely to enable them to get on with what they want to do than anything they find in Europe or North America. So how helpful is it to you in developing your business to have this sort of cluster, and not just the regulatory support, but actually a cluster of other platforms in the same location as you?
Yeah, when we first started in this business, we've definitely seen a chicken and egg problem. You certainly don't want to be the only one doing what we are doing, but you also don't want to be in a saturated market where everyone's offering the same service. And I don't think that's the case, or at least we're not there yet. We're still early days, and a lot of what everyone building industry has to do is education. So having more players pushing the agenda forward is actually a good thing. And at this point, everyone in the market is all somewhat differentiated based on their product offerings, whether that's real estate funds, startup funding, or it's differentiated based on their client base. They're only targeting institutional or retail investors, or it's geography centric, or technology. Are they using only private blockchains or public blockchains? Different verticals, as well as the technical design and architecture. All of these things will differentiate each of the platforms. But I think our ultimate goals are similar in that we're all trying to democratize access and funding. How we're getting there is slightly different. And specifically, you mentioned MarketNode, FundNode. I believe they're building basically the infrastructure that's needed for the private market space. I understand that what they're building is similar to a central depository for the public markets, except they're building it for funds, FundNode, or the private markets as a central depository registry for tokenized securities. So they're actually not competing. We could all utilize the same services. So in that sense, it's non-competing. We were one of the first security token platforms globally, I think, along with ADX. There were no precedents and really no one to look at, to follow or copy. And we've done a number of world first project. We did a project called EVCC where we tokenized the Singapore Variable Capital Company in a blockchain native structure. And when we first started, I think there were no blockchain conferences that were dedicated specifically to security tokens, and now there are. So a lot has changed since when we first started. I think there, definitely helps to have all of these other cluster of platforms, as you said, involved in pushing the adoption.
Now, as you said, there is a world of assets out there to be tokenized. You just mentioned your early experience with the variable capital issue. You mentioned also you began as a crowdfunding company. But where have you got to now? What issues have you actually done so far, and how much do those reflect your history as opposed to what's going to happen in the future?
Yeah, just to touch upon a point I spoke about earlier, where we're trying to take the focus away from only fundraising. The value of tokenization, I think for many initially was focused on providing liquidity for illiquid assets, but tokenization makes an asset much more multi-dimensional than simply providing liquidity for illiquid assets or fundraising as an alternative source of fundraising. And what we are trying to do is allow issuers to extract more value out of assets they own. And once they tokenize it, you can trade it, lend it, securitize it, become a liquidity provider on a platform like IXswap, plug into other DeFi applications, and putting my legal hat on because I'm a lawyer by training, you can bundle and unbundle interest in an asset, from ownership rights to economic rights to utilization rights, and transfer some or all of those interests. So to your specific question, we started out as a real estate crowdfunding platform, so we had a heavy focus on real estate. So we've issued across the entire capital structure, from mezz to senior debt to equity, as well as funds, real estate funds, venture capital funds. And I mentioned the EVCC project. We've also issued or tokenized physical as well as NFTs. One of the key areas we're focusing more on is back to the whole ethos of why we started the business, in line with crowdfunding ethos. We're helping early and mid-stage companies in the Web3 space who lack venues for fundraising, and individual investors who typically couldn't access private equity investments or private investments in general. So we're talking about companies that and investors on the other side who actually need it the most. And we're about to, on IXswap, launch an IXswap launch pad, which is reserved for early stage startups. So, a bit more focused on these types of issuances.
You mentioned real estate funds. I think you've had some success with other types of fund as well. And as far as you have been working with funds, what explains your degree of success with funds as opposed to direct issuers?
Yeah, I don't know. I wouldn't say that we're more successful than others in terms of fund tokenization, but fund tokenization makes a lot of sense, especially for close-ended funds where there's a long lockup period and no redemption until the end of the fund life cycle. There are, I think, some fundamental structural alignment issues for investors and fund managers in a typical fund as well. Sponsors are constantly focused on fundraising when they should be looking at portfolio management. And once the funds are raised, often the fund managers are paid regardless of fund performance on the 2 and 20 model, right? So if you tokenize a fund, you can lock in the funds, but not the investors, and also create new fee structures which align the fund manager and the investor's interest better. This is something we're trying to develop with a US-based real estate fund manager in what we call an evergreen structure. But, back to Singapore, as I mentioned, we were the first to tokenize the Singapore Variable Capital Company. The VCC is a new fund structure, which is similar to the Cayman structure of a master sub-fund. And this we did with a MAS grant, along with UBS as fund manager, State Street as the fund admin. And the VCC specifically is conducive for tokenization because the VCC Act itself permits issuers to determine how the member registry is held, which means we could issue a complete on-chain blockchain native fund, and all the stakeholders would access the same blockchain registry. So this is one of the reasons why we think funds are quite conducive.
Now, I don't know whether you're willing or able to comment on this, but I'd be interested in your views if you do have some, on another issue which has arisen around fund tokenization, which is, on the one hand, you can tokenize the units, the shares in the fund itself. Doesn't do much for you. You might just end up with investors being registered on a blockchain, but doesn't seem to change much else. It leaves all the service providers in place, leaves the fee structures unchanged, and so on. Against that, a more radical model would be about tokenizing the underlying assets of the fund. To what extent is this a live debate for you and for everyone in Singapore?
It's a live debate. In fact, even last week we had this debate about tokenizing real assets. In this particular case, it was trees. Can we actually tokenize individual trees and grant that to, say, investors who want to own, a specific subset of entire land? And I don't think we're there yet. This would, there's a lot of complications with that. Essentially, these are, once you create the token, they would become non-fungible tokens if it's representing individual trees. And then how do you then create a secondary market trading valuation for these trees if they all represent different, in case that one tree grows 15% bigger than the average tree and another tree doesn't, these kind of things are things to consider. So it is a live debate. There have been inquiries on tokenizing, of course, the real asset, the real estate asset behind the structure. And that would probably require some legislative change in how the title and land registries recognize title ownership. And I know there have been other companies in the US and in Europe who have been looking at, doing exactly that. But what we're focused on is primarily tokenizing the instrument or the ownership at the entity level rather than the actual underlying asset.
Mm-hmm. Trees are an interesting example, aren't they? Because you could, in a tokenized model, you could sell separately the land on which the tree grows. You could sell separately the tree once it's been turned into timber. So you can kind of disaggregate all the pieces of a timber business in that way, can't you? But I hear what you're saying about the difficulty of tokenizing the underlying asset in a real estate fund. It would obviously, as you say, you have to kind of do it at the ownership level, who owns this building, and in effect you're tokenizing shares in the company which owns the building. But securities generally, I suppose we have to wait, for the tokenization of underlying to work at scale. We have to have a lot of tokenized securities, don't we? Those underlyings have to get tokenized, and how you get there is a very interesting question.
Yeah, I mean, we've got very I think lofty goals, and we think that hopefully one day all securities will be tokenized. So and that maybe in the near future or not so far distant future. you won't have to qualify an offer with a digital offer, but that all offers will take the form of a digital form, and we don't question the technology behind it. That's what we would like to think. But yeah.
And who do you have to convince? Is it the issuers or the investors or both? If you're trying to create a future in which every asset is tokenized in the way you've just described, who matters most, issuers or investors?
Well, I think right now it's important to bring on quality issuers and projects. So right now, a big focus on the issuers, but again, it's a chicken and egg problem, right? If you had a lot of investors, then the issuers will naturally come as well. But in order to build that credibility and trust, I think bringing on very credible issuers with very attractive returns will be important. What we're trying to also say to the issuers who are coming to us is that don't solely focus on the fundraising capability or, oh, this is going to provide you liquidity. What we say when we're speaking to our clients is that having, a tokenized version allows you to do so much more with it, to interact with DeFi protocols, to plug into Web3 applications, to lend and borrow against these assets and trade against these assets that you wouldn't have had the capability of doing before. So this is one way of how you convince the issuers that this is ultimately the future. If you have a digital dollar, and this is what it looks like in the future, I truly believe that we'll all move to some form of digital currencies, whether it's stable coins or central bank issued digital currencies. Those digital dollars will have to interact on the other side with digital securities, some form of securities that's represented in digital form. And so this is how we see the future, and this is why we're building all the infrastructure around that.
I hear what you're saying about what you're telling issuers, don't focus purely on the fundraising, think about how you can use your tokens as collateral for a borrowing. But just on this narrow question, obviously raising funds and the price at which those funds are raised is an issue for issuers. And how successful have you been in terms of what you've done so far in raising funds at a good price? In other words, how are you meeting the expectations of the issuers in terms of quantity and price, or what's been your experience?
Yeah, I think what we have been providing and focusing on is our tokenization SaaS platform. The ability to raise funds will depend on a lot of things: the return profile, the quality of the issuer, all of the other things that generally are required with fundraising, marketing efforts, pitch materials. But through our platform, we have raised anywhere from smaller amounts for startups, $50,000, to larger tickets, $10 to $20 million for any particular project. So it really just depends on the offer and the return profile and everything that goes along with the typical investment offering. Just because you tokenize something doesn't change the thesis of investment.
Mm-hmm. What about asset classes? Do these, and by here I mean, are you focusing on alternatives, on real estate, hedge funds, racehorses, whiskey, whatever it is? What difference does that make? So you having more success with some asset classes than others, and you're kind of concentrating your efforts there?
Well, I think because of our current model, which is a tokenization SaaS platform, you can tokenize any asset class. Essentially, anything of value can be tokenized. You may say that this is a lack of focus, but as mentioned earlier, we're making an infrastructure play. So we see this as the future of all assets will be tokenized or digitized. So any Web2 company with any asset can use our services to become Web3 compatible. So yeah, pretty wide.
Right. You said a minute ago that in an ideal world, you'd have lots of investors, the issuers would naturally come, but you want both of those to be very high quality. In an ideal world, you'd have high quality institutional investors, you'd have prestige, recognized brand name issuers, and that would really help to get the market going. If we talk just a little bit about the investor side in particular, let's say you're looking to get institutional investors involved, you want institutional business. How hard is it to win them over in terms of their attitudes towards the asset class, but also in terms of their attitude towards regulation? Because institutions like regulation, don't they?
Mm-hmm. Yeah. And yeah, definitely a very important point. And you touched upon this earlier. Singapore, is it a good jurisdiction to be establishing your business for this type of industry? And I think as you can see, even recently with all of the announcements coming out of the US, where they're regulating by enforcement, it doesn't really give a lot of operators comfort, right? And so we've set up here, and it's been so far a great choice in terms of jurisdiction. As you may be aware, the MAS is fully behind asset tokenization. And if you saw any of the speeches by Ravi Menon at Singapore Fintech Festival last year, as well as Green Shoot Series, Ravi Menon is the MD for the MAS. He openly said that MAS sees the innovative combination of tokenization and distributed ledgers as offering transformative economic potential, not unlike, and this is kind of quoting him, maybe not exact words, not unlike securitization 50 years ago, right? So you actually in Singapore have the support of the regulators, which is hugely important for institutional adoption. When we first adopted blockchain into the business in 2018, we were doing the hard yards, trying to push the traditional finance guys, educating them and taking the slow and steady approach, the regulated approach, and sometimes very painful approach, trying to get all of the appropriate licenses. Fast forward to 2023, we're now seeing all of it, as you mentioned, all of these banks and traditional financial institutions creating their own tokenization platforms, where we were educating them back then, and now they're actually putting out thought pieces, right? I think there was a recent article on asset tokenization that was put together by DBS, JP Morgan, and the MAS. And then you're also seeing, other services and infrastructure being built that support asset tokenization by these exact same financial institutions. So it's been a huge change since when we started in this industry.
Mm-hmm. Yes, we have noticed the MAS attitudes. We've noticed Project Guardian, I think it's called, which you just referred to a minute ago. But from the point of view of your business in particular, you say the regulator is behind this, but what does it mean for you in practical terms? And I'll put that question to you very specifically. What regulatory licenses have you obtained, and why have you obtained them? Why did you need to get them?
Yeah, sure. And that's one of the things I do want to highlight is, although we're a tokenization SaaS platform, what we're offering is also a regulated platform for issuers to issue their security tokens. And the license that we hold are CMS license, Capital Market Services license for dealing in securities. We have a recognized market operator license to operate a recognized market for the secondary trading of security tokens. And the sister platform, IXswap, was recently granted a license in the Bahamas. Now, I know you're thinking, wow, Bahamas, FTX debacle,
Yep.
why did you go there? We put in the application way before FTX debacle happened. And if anything, I think it's actually now applicants and licensees will be more strictly scrutinized because of FTX. So I think you're actually getting more protection. So IXswap is licensed in the Bahamas to deal with all types of digital asset services.
I hadn't thought of regulatory jurisdictions as being a bit like choosing asset managers. You should always appoint them when they've had a terrible year, because it can only get better. You've touched on this before, but it'd be good to be clear on this as well. You are a tokenization as a service platform. What does that mean in terms of the actual services you're providing? Are you providing advisory service to issuers? Are you providing trading, settlement, custody? What are the services you're providing as part of that?
Yeah, so
tokenization as service.
It is truly a full suite, end to end. We have our own tokenization technology. You can issue, fundraise. We do the onboarding of investors, KYC, AML. We do have distribution networks, and of course, advisory that goes along with that. Custody through a licensed custodian partner, which is Hex Trust at the moment in Singapore. And IXswap is partnered with First Digital out of Hong Kong. And as well as liquidity pool solution through IXswap. All of these services you get in a one-stop shop on our platform.
You're working with HSBC as well, am I right to say that?
Yes.
On the cash side?
Yes, yes, okay. That's correct. We're plugged into and integrated with HSBC for all the cash settlement services.
Okay, and would I be right to think that working with Hex Trust and with HSBC is reassuring for those institutional investors you're looking to get involved?
Yes, I think everything that we're touching is security tokens and a regulated activity. So having licensed entities and players operating behind the scenes is definitely providing the hopefully assurance for customers. And nothing different. I think when we talked about accessing DeFi protocols through a trusted front end intermediary, you think that even if, essentially, why is that needed? Because in the back end, you leave that to technology, but it's needed because the regulators still need to point fingers to somebody in case something goes wrong, and you need to have a responsible party held liable, right? And so having each of these licensed entities facilitating the respective activities is some form of additional assurance.
How do you go about finding investors? Is it knocking on doors, or is there more to it than that?
Well, believe it or not, I think there are a lot of forward-thinking companies out there. So we do get a lot of inbound inquiries because we think education is hugely important. So we put out thought pieces. We do our own masterclass on topics covering regulations, what's trending in the space, or partners we work with. But we also have an IBF accredited course for financial institutions on security tokens, but also through, our partner networks. Our philosophy is truly, more collaboration is needed. This industry is just starting out, and it's to the benefit of everyone who's operating in the space to collaborate. We don't want to work in silos. We're constantly looking for partners to work with in every capacity, whether that's distribution partners or service providers, other platforms like us. We signed an MOU with OSL and Archax to work out this exact issue of interoperability. And because, as I mentioned, we've been around for a while, we do have an existing database. We have about 1,200 VCs in our network that we're actively looking to convert for these existing Web 2 companies and make them Web 3 compatible.
How important are retail investors in the long term?
Oh, yeah, I think for IXswap specifically, it's quite important. As I mentioned, we're licensed in the Bahamas, and that license allows us to deal with retail investors for security tokens. So it is quite important. And the launch pad on IXswap is focused on small, early stage type of projects, primarily Web3 focused, or at least tokenized offerings. So investors are issued security tokens. And in that instance, I think the retail segment is quite important. But our Singapore platform works with institutional investors, accredited investors, and expert investors. There'll always be issuers who only want to deal with sophisticated investors because their product offerings are more complex, right? As an example, we have an FX strategy product on our platform right now, which is only for AIs and IIs.
Something that strikes me here is that retail investors are probably the biggest beneficiaries of a fully tokenized capital market, by which I mean that even with relatively small sums of money, you could start to get exposure to very large corporations. You could start to personalize people's risk profiles to match with their point in their lives they've reached, what their goals are, what their liabilities are going forward. But you kind of can't start there. So if you start to think long term, what is the long-term strategy for recruiting retail investors? Is it to start with some wealthier investors and prove the concept works with them, or do you simply start going to the banks and wealth managers and stockbrokers which control retail investors?
Yeah, I think I think we started with a B2C platform. So we've been there before. The original pre-blockchain company started in 2015. It was purely crowdfunding, and that was mostly through organic growth. But our long-term strategy is through B2B relationships, and those who already have a lot of investors, whether retail or accredited investors, already on their platforms. The likes of, and I'm not saying anything about whether we have a relationship with them or not, but I can think of the likes of Grab or the likes of other, perhaps even e-commerce websites that may have retail investors and eyeballs that are looking for financial services. A lot of these companies are trying to become a super app these days, right? And offering financial products as well. So, I think there's a strategy to be looking at developing that investor base through a B2B strategy.
One day we'll have a marketplace with lots of issuers and lots of investors. But as you say, this industry is really only just starting out. There are some very obvious benefits for different types of issuers. You mentioned for funds, for example, that actually tokenization could enable them to move away from that principal-based model and have permanent capital to invest, simply because the investors could exit the fund by selling in a secondary market. Which is the question I really want to ask you now. I think I'm right to say you're planning a secondary market, and I wondered what progress you've made towards that and how quickly you think that can develop into something genuinely liquid.
Yeah, we obtained our recognized market operator license only at the end of last year. And IXswap was only granted a license, just being granted a license as we speak. So those are being developed, as you said, the secondary market. Now, we created the AMM out of necessity because there has not been a lot of liquidity in security token secondary markets. The AMM allows anyone who holds a security token to create their own liquidity pool. And it's a crowdsourced liquidity pool provider. Anyone who has a security token can create one for as little as $10,000 pools. Of course, that's not sufficient to provide, the liquidity, but it's just never been done before, and it's a start. If we look at, I think, the ETF market, which I mentioned earlier, a lot of people thought that it was a failure because I think back in 1989, it had an $11 million, I think, market cap, and it's now a $5 trillion market, right? And that's why I'm saying if we're drawing parallels here, we're at that starting point of 1989 with the ETFs, where asset tokenization is just starting, but the opportunity is enormous.
Your experience of this area of endeavor goes all the way back beyond the ICO boom, where it all began. You've just alluded to the ETF markets, which exploded from nothing, and we have seen other markets do the same. Money market funds would be another good example of something which came from small beginnings and became very big. But as you look back over your hard-earned experience, how do you think let's call it the tokenization industry sits now compared to where we were 3 years ago, 5 years ago? In a way, I'm asking you what keeps your faith strong that this is one day actually going to happen.
Yeah. Yeah, you're right. I think many different companies have started down this path and given up, and we've persisted over these years purely out of the fact that we're seeing the changes come along, the adoption come along, and the quality of issuers, inbound inquiries that's coming, and and the engagement that we have on a daily basis with a lot of the innovation teams across banks and financial institutions, and the fact that we are setting our own precedents and kind of paving the way in what we think may be a vital component of the future of finance, which is what this podcast is all about, is what drives us to do what we do and continue doing what we do. It hasn't been an easy road by any means. A lot of regulatory hurdles, a lot of license applications. We may be in the process of getting even more licenses, but I think what really inspires us on our whole team is the fact that we're doing something that's never been done before, and we're just creating our own path and setting our own precedents. And it's very exciting. And we get driven by all of the encouragement from, the daily inbound inquiries and the discussions, very, very, very high level discussions that we have with multiple financial institutions across the globe that has kept us going all this time. So most up to this day, a lot of it has been in POC stage, right? But we're starting to hear, and we are actually actively pursuing commercialization of a lot of these projects, including EVCC, which is something that we did in a POC stage, but finally looking to commercialize, hopefully this year.
One last question for you, As, before I let you go, and it's this. You have mentioned education a number of times during this conversation, because this is a new thing and people have to learn to understand it. It's also a fast evolving thing. The issues are changing all the time, and they're not uncomplex. You have to make considerable effort to understand what the advantages and disadvantages are. If I said to you, the conversations you're having with incumbent institutions, and I'm thinking here of asset managers, institutional investors, the clients of the asset managers, and indeed corporate issuers. Are the conversations you're having with them now less about, what the hell is this thing, tokenization, more about what can it do for me? How can we make it happen? And why do I need it to happen? What incentives do I have to make it happen? Are the conversations more business-like now and less educational with those three groups?
That's exactly right on. And that's part of the reason why we continue to do what we do, is because we have seen that understanding improve over the years. You're exactly right on. It's now a lot more sophisticated dialogue and understanding about asset tokenization and technology, and they have their own internal teams who are dedicated to specific projects like this. And so the discussions have changed drastically from when we first started, where it was basic breakdown. What is the blockchain? What is private versus public protocols? What are smart contracts? To now, how can I use this in my various, divisions and departments within an organization? And a little bit of FOMO, where they're thinking, wow, everyone has done something now, I have to do something. So yeah, the discussion has changed drastically.
Alice, Chen, thanks very much for taking the time to share your experience and insights with the members of Future of Finance.
Thank you. Thanks so much for having me.